Hello, everyone. My guest today is Matt Price. He's the Senior Vice President of Zendesk's product portfolio. Now, prior to this role, he served as SVP of Marketing and as Vice President and General Manager, Europe, Middle East, and Africa. Before joining Zendesk, he served as the Chief Marketing Officer at another technology company. Matt, are you ready to take us to the top?
I'm really excited to be here, Nathan.
Good.
Yeah, let's go.
Thanks for joining. So, usually I have founders on, but you've been around Zendesk so long, you've seen a lot of the story. When did Zendesk launch and what year did you join?
Zendesk launched almost exactly 10 years ago, and I joined 6 years ago. And in fact, I kind of like to characterize myself as a founder. I was the first hire in Europe. So part of that and helped set up the business, then. Fell in love with Zendesk and SaaS.
And so walk us through, obviously Zendesk does many things. In fact, I've had one entrepreneur on, I forget his name, but it was with Outbound and you guys acquired him. So we got some of the Zendesk story through those guys, but tell us what Zendesk does today and what's the core business model? How do you make money?
Yeah, I mean, Zendesk is a customer service platform, quite simply. And what made Zendesk so successful in the early days, I mean, Zendesk got its first 10,000 customers without any salespeople. And what they figured out was a way to actually take something that was kind of simple that everybody needed, which was customer service, but cost hundreds of thousands of dollars and loads of consultants in order to get it up and running, and make that super simple for any type of business to get up and running. And that's what we're still doing today. We're trying to take complex things, make them very consumable, allow people to buy them from a subscription model, allow them to try it before they buy. So really classic SaaS.
And I want to dive into pricing strategy, product positioning, that kind of stuff, because what you're focused on. But just real quick, some rapid fire stuff. Zendesk today, team size is what?
Just over 2,000 employees.
Okay, 2,000. And mainly spread between which two cities or three or more?
Yeah, I mean, headquarters in San Francisco, but we have large offices in Melbourne, in Australia, Dublin. We have a big facility in Madison, Wisconsin as well.
Okay, great. And then in terms of funding, total funding raised is what today?
We raised 85 million pre-IPO, 100 million at IPO, and then 200 million on secondary.
Yep. So let's go back pre-IPO. Remind us again what IPO date was.
Oh, now you're saying it was May the 15th. What do we say? 2015.
Okay, good. So pre-IPO, what was shaping? You would have been at the company about 3 years, I think, at that point, or 4 years. What was shaping product strategy, and how did you think about pricing?
Yeah, at that stage, we were really just starting our evolution from being a single product company to become a multi-product company, and so that was one dynamic in thinking about pricing. The other dynamic is that we were really starting to move up market for larger businesses at that point in time. Zendesk, was for small businesses to begin with, but really started to acquire a lot larger business. And we think of that as people who have more than 100 seats. What we really started to think about at that time was really how do we put a pricing model that allows companies to pay for the value they're getting out of the software, allows them to scale really simply, and keeps complexity out of the business model. So a lot of these enterprise software vendors had super complex menus of purchasing options, and we just wanted to keep it very simple. So we stayed true. We had a per agent cost, and you could have a plan type of just a simple plan or a more enterprise plan as well. And that's pretty much where we are today. We have a few variations on that, but it's where we are.
Was it accidental that you ended up moving upstream, or was that intentional? At the board meeting, investors are going, we've got to charge more. Like, we need margins to be higher. We need less touch.
No, it was never really a factor of the commercial aspects. I mean, Zendesk business really grew. I mean, right from the day when the guys just put the first website out and the first customers bought, we were very much a product and demand driven company. And so we would look at early demand or early adoption patterns, and then start to test, say, okay, is this where we can take things? And if we invest in these areas, will it help? And what we found from enterprise software was all of a sudden we were getting these large businesses who say, hey, we love the simplicity of what you do. We love that we can test and buy. We found that we were finding buyers in customer service whose IT departments couldn't help them. And they could set up and run the things themselves rather than having to hire outside parties. And so we doubled down on it. And that's what we try and do today with, even as we move more up market, we try and make our software such you don't need to spend hundreds of thousands of dollars on consulting, but you can deploy it very quickly. And that's where a lot of the enterprise traction is coming from.
And now you have chat, support, guide, and talk as kind of your big beachheads, correct?
Those are the main products for the channels. And then obviously, as you mentioned, we made recent acquisition on Outbound, which is a new product we're bringing into the portfolio.
You're public. Really that price had to have been released, right? What'd you guys pay for them?
No, it hasn't been released, actually.
Oh, it hasn't? Okay.
No. But I mean, but when we looked at them, I mean, it's interesting to think about how we do value these. They gave a really interesting strategic value because we see support moving from being not just a reactive thing, but a proactive thing where you can push messages out when you realize a customer might be having problems. And so taking what they built from a marketing perspective and applying that to proactive service was super interesting. And we loved the talent that we acquired and the vision. And so for us, it offered a lot of value on a number of vectors. And that's what we look for on acquisition.
Are you talking right now to front app for an acquisition?
We are not.
You're not. How do you decide? As far as you were, that's a good answer. You can always plausible deniability. If it happens tomorrow, you can say, Nathan, I had no idea.
Hey, welcome to being a public company.
Well, exactly. In all seriousness, though, how do you decide? I mean, that space, I could point to 30 companies, very similar to Outbound, very similar teams, very similar tech stack. How do you make decisions around where to focus your time?
We have a reasonable understanding based upon where what our customers are asking for and some of the market dynamics as to where things are moving. And then from that, really, it's just a case of, okay, should we build in order to base it on our own tech stack, or are there some people and some tech that's there that can really help to accelerate that and also enhance our knowledge of a particular domain? And that's what we found from the Outbound guys. But there's some stuff we built ourselves. Our latest machine learning product, AnswerBot, we built ourselves. And we have data scientists on staff, and because a lot of the work on that is how does it integrate very, very smoothly into the other products that you've got.
Mm-hmm. Walk me through pricing axes. And what I mean by that is when Brian Halligan came on the show, he talked about a key driver of HubSpot's growth was to break from just a Cartesian plane where there were two things that you could upsell on, maybe seats and some feature, and adding a third and a fourth and a fifth and a sixth, but you can't add too much complexity. How do you make a decision whether to add something as a pricing-based utility axis or just let it be included for free?
Yeah, I think it's a really good question. I think that sometimes putting things in as free can actually add complexity to the customer if they're not going to want to use it, and also makes them feel that they're maybe overpaying because they're getting things that they actually don't want to use. I mean, the traditional pricing model calls them, killers. I think McDonald's did testing, and that's why they add the fries, but they don't throw in the apple pie, because they add apple pies into their suite, and the sales of it went down, regardless if somebody was getting it for free. So that's the first consideration. There's been a lot of work and a lot of studies on that. Then the question is how do you equate the pricing model to value? And an example of that is AnswerBot. So, for example, this is an ML product that we bought that will actually solve customer questions for you based upon looking at the question and then finding resources. And we looked at that and the value to a customer of them not having to have that question go to a support agent, which tends to cost, can cost $20, is very, very high. So we decided to price that separately, and we charge $1 per resolution on that as well. And it's very easy for the customer.
Starting at the $50 per month.
Uh-huh.
Yeah. It's the reason I bring these questions up is because when I go between your support, chat, guide, and talk pricing models, like support, it's very clear. There's one utility-based pricing metric that I can see, which is number of agents. The rest are bullet points tied really to features. When I go to chat, though, when you go from light to a team plan, you do have some utility-based metrics or number-based metrics that are not per agents. For example, 2 triggers, 2 departments. Those then turn unlimited at the $30 price point. So I'm trying to get a sense of, are these always under testing mode, or have you identified that you should only have one number-based metric tied to a pricing plan.
Yeah, I mean, this is the beauty of SaaS. When we started talking, I just fell in love with SaaS and its business, and somebody who comes from the commercial side. And you can enter into these decisions with your eyes very wide open as to what are people using, and set some thresholds there as to the types of businesses and what the long tail is on some of this stuff. And so actually, typically where a long tail exists, then there's an opportunity to actually add a premium price into those features, because they have very specific utility to a small number of customers.
When you look at new experiments to run, how do you typically find them? I found it very interesting when I've had some other CEOs that are your size software companies. They'll look at customers that have had the highest lifetime value over the past 10 years, reverse engineer their onboarding flows, and then replicate that for new customers coming on. How do you do it?
Yeah, I think it's a really good question. And actually, if you were to ask me what I wish I'd done, 6 years ago, or if I was founding a company now, actually building and ingraining testing methodology into a business right from day one would be super important. And whether it's building A/B testing into structures, into everything that you do, collecting the right product analytics, or testing in a geography before you roll out to the whole business. We definitely look for signals. We look for, and we do segment for usage across different customer segments and different plans. I wouldn't say we necessarily focus on trying to replicate what is the largest customers. Largest customers tend to be outliers and have very unique requirements, in which case you need to overlay certain levels of service on top of that. A lot of what we're trying to do on product is really solve the problem for our broad base of customers, and and move things in that direction. Typically, it's around product usage, though.
Yeah. How do you differentiate between what's signal and what's noise? And can you quantify that in terms of a sample size or cohort? If this percent of people do X, we know it's a signal, not noise.
It's again, it is variable. I think in many cases on product usage, you have to look at things for a certain amount of time. It's amazing how time can pass, whether it's trial adoption or not, because you are going to get weird things like seasonality coming in, or you're going to get other factors coming in. So I would say looking at things long enough. It's funny you say on that on using a sample set or not as well, because I feel a lot of people don't use cohorts or samples enough. So actually, you can get probably more intelligence a lot of time than out of taking a sample of 100 customers and looking deep into what those customers are doing, whether it's when did they adopt, what features are they doing. You've got a big enough sample size that you can then extend out across your whole base, rather than trying to do a top-down and look at your whole user base and make assessments out of that. So I always encourage our product managers to try and, even if they're looking at broad-based metrics, to look at a customer cohort and go deep and understand what's underlying the numbers as well.
Do you have a system or a process that makes experimentation in pricing and onboarding at Zendesk easy? And it might sound something like, if anyone wants to run a test that requires a budget of less than $2,000 and less than a sample size of testing on 1% of our customers, they can do it without my approval. Do you have any kind of format process like that?
There's definitely small tests that we can use on subsections products on things like onboarding or feature adoption. Anything that tends to hit the main funnel or has a potential revenue, meaningful revenue impact, then we'll look at very carefully. But we do I work very closely with our CMO, and we typically, in the same way that developers have backlogs of things they want to get to, we have a backlog of things that we want to get to, and some of it's low-hanging fruit, some of it requires re-engineering of processes, which is a longer-term project.
Yep. No, a lot of people will credit Facebook's success and Amazon's success to the process of how their systems are set up that allows for not, as Malcolm Gladwell will say, 10,000 hours of practice, but the first to 10,000 tests is who wins. Yeah. And so whoever builds a system to test faster, more efficiently, is actually who's going to win over the long run.
It's exactly that. And that's, people use corporate words like agility and, moving fast. And ultimately, that's a lot of what it is. It's being able to test quickly. One of my favorite quotes from an old boss was that, when you're moving fast or growing fast, you're going to fall over a lot. And it's not how many times you fall over, it's how quickly you recover. Mm-hmm. And putting that early sensing and recovery against your tests and making decisions quickly is really important.
When you have a tool that you launch, like your automated response on customer support, if that starts to do really well, people might not need to pay so many support people, which means their per agent pricing goes down on one of your other products. How do you deal and try and identify patterns where even the success on one of your products actually cannibalizes one of your others? And do you do anything to try and balance that?
Yeah, I mean, ultimately, what you have to do is try and actually build products that, or not try and skew the market to what you want people to buy. You have to actually deliver stuff that people actually want to use, and then think about how you price for the value on the back of that. So, we're going full on automation and self-service, and we price per agents, but we know that we can figure it out down the line. The important thing is to deliver technology that's relevant to the customer today. But when we do launch, we do look at things carefully. We'll do survey research. We'll work with some of our early adoption customers. We'll look at some of the metrics that they're getting. I mean, what's interesting on AnswerBot, which is our product, one of our earlier customers was Dollar Shave Club. And actually what they did was, even though that they were freeing up time, even though that we were answering more solutions, they decided to actually keep the same number of agents and invest that agent time and offer a better level of service. And I think that actually characterizes where a lot of these leading companies or disruptors are, is that they're looking to how they can gain a competitive advantage for service, not necessarily drive the cost to the bottom line.
Over the next 12 months, what will be a bigger driver of Zendesk product and pricing decisions? Increasing wallet share across current customer base, or expanding ARPU across current customer base, or going and finding new wallets to acquire completely?
Yeah, we're definitely seeing very strong growth up market. I think over a third of our MRR now comes from customers with more than 100 agents, and we are investing all the time in order to add capabilities within that area, but at the same time keep the product super simple to deploy and configure. So that's one of our drivers. That obviously helps us with win rate and new customer acquisition. There are some interesting dynamics happening though, where we're seeing. I gave the example before about how a large number of people are involved in the support and service process. So we're very interested in how we can support those people and increase the use of Zendesk beyond just the core base, but other people within the organization as well. So that's potentially existing seats. And then obviously as we add new value and add new products, then that increases the ARPU as well. So, I mean, you nailed the three vectors that we look at from any new product thing. It's win rate, seats, and ARPU.
Yep. So what I just heard you saying, if you already have a relationship with a support team at company X, you're more likely to go buy something that you can then sell to their tech team or their marketing or their HR team than you are to go try and, land a new customer in some brand new product field.
Yeah, we're careful about being very specific about, we want to win new customers. We want to own support, obviously. We feel we should do, and we feel we offer a great competitive advantage there. Where we look at new buyer groups, and actually when people buy our support product, we actually find that their IT team will take it for answering tickets. Their HR team will take it for doing internal customer service. And what we're starting to see now with this convergence of support and service, and this relates to the Outbound acquisition, is that we're starting to see this merger between service and marketing as well. So rather than going after a whole new area, we look for overlaps and use cases of where our heartland is, and then look at how we expand out from there as
Matt, before we wrap up with the famous five, because you're public now, you have to be a little more careful about how you manage your public interviews and things. What is one idea you so badly want to test it, but you would never recommend it in a public setting with analysts because it will just blow the stock up?
Suggesting maybe I worked from a Caribbean island, but that's probably...
That is a beautiful question dodge. I will give you credit. All right, let's wrap up here, Matt, with the famous five. Number one, what's your favorite business book?
I'm really enjoyed Zone to Win recently. It talks about how you incubate products within a larger organization and bring them to market.
Number 2, is there a CEO you're following or studying currently?
I keep a very close eye on Mikkel Svane, my own CEO. Not just from the fact that it's good to know what he's thinking next, but actually he is the real soul of the company. And he has a really, really good compass as to what the right thing is to do and not. And I learned a heck of a lot from that.
Number 3, besides Zendesk, what's your favorite online tool for building the business?
I think, like a lot of the people you interview, I think the LinkedIn I use a lot. I also like Crunchbase a lot. I think it provides a lot of valuable information, not just for investment, but knowing who the investors are in a company really can help you understand a lot about the pedigree and who the company is as well.
In terms of, should your sales team reach out and try to sell them because they just raised capital?
No, actually, nothing. Not so much of that. It's just more of understanding, who are their connections are, and obviously understanding board relationships, especially as you acquire more investors. There's very likely to be an investor overlap within certain sectors. So really just trying to understand the dynamics and work with other people within the organization through an investor route can be very effective.
Number 4, how many hours of sleep do you get every night?
Depends on which time zone I'm in or which one I've just moved to, but I try and get 6, and then I'll try and get 45 a week.
And what's your situation? Married, single, you have kiddos?
I am single with a couple of kids.
Single with a couple of kids. And Matt, how old are you today?
I am 50.
50. Last question. Take us back to your 20-year-old self. What do you wish he knew?
I would tell myself to think bigger, think a lot bigger.
There, you guys have it from Matt Price. Think bigger. He's obviously been with Zendesk for about 6 years now, through the IPO, through it all. They're thinking about both how to increase wallet share from current customers, deliver more value. It's a constant struggle with the marketing backlog in terms of what experiments to run, but they're figuring it out. Do more cohort analysis. As he says, it's been a guiding light for him. Matt, thank you so much for taking us to the top.
Such a pleasure. Thanks for having me on.